Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong buy response ahead of the 40 half high volume node, and buyers at this point have pushed ES all the way up into the 55 half to 57.75 initial resistance and even poked above it a bit. Now heading into the open, we know that short term the buyers are in control, but initiating a new long at 55 half to 57.75 is quite risky. Ideally, you want to see a pullback towards the 2051 high volume node or the 47 half to 50 pre-market support and initiate along there looking for a breakout and continuation above the initial resistance zone. Now, in order to take the long at pre-market support, ideally you want to see the market just putting in a normal pullback and not really pushing down on high momentum. So as long as we're not seeing any strong downside momentum and the market pulls back towards 47.5 to 50 or the 51 high volume node, that could be a decent spot to attempt a long in anticipation of a breakout and continuation into the 68.5 to 71 resistance area. But we are going to have to see a positive advanced decline line, ideally the tick spending more time above zero in order for that scenario to take place. Below that, we have the previous close at 45 quarter, followed by the initial support zone at 41 quarter to 43 quarter, and that's pretty much the final spot. The 40 half high volume node and the initial support at 41 quarter to 43 quarter is really the final area if the buyers are going to maintain control. And a break below that area can shift the short-term control from buyers to sellers, and then we can even get some range extension down into the 33 quarter, 34 quarter zone, 29 half to 31 half, and if there's some real liquidation, possibly even 22 to 24 half, which marks a range extreme. So heading into the open, we are going to be favoring the buy side given the strength that we've seen here in the overnight session. The focus will be more on the long side, but with the understanding that we want to look to get involved on a pullback, not necessarily at a very aggressive price like the 55 half to 57.75 area, because the market can technically still struggle here and it might even poke a little bit above and then pull back, and you don't want to get emotional and try to chase the market when it's already moved up quite a bit. So even if it's a minor pullback, that's still better than getting involved at the 57 area. And like I said, in order for the market to actually continue and put in a real breakout above initial resistance, we are going to have to see broad market strength and some sustained upside momentum, and then the upside target can be 68 half to 71. Beyond that, we have some resistance at 72, 75, and 76, and the range would be quite exhausted by then as well. So 68 half to 71 is the high odds upside objective. Beyond that, it starts to get a bit tough, and first test of 68 half to 71 can attract responsive sellers depending on how we actually approach that zone. And then beyond that, you start really pushing a range extreme, and it becomes difficult to go too far beyond the 71 area. So those are really the main thoughts heading into the open. Overnight bias being bullish puts the focus more on the long side, and ideally you want to see the market holding above 47 half to 50, above 51 if we are going to continue. Simply a failure at pre-market support would be a warning sign in and of itself, but the 40 half and the 41 quarter, 43 quarter are really the final areas where buyers have to step in, and if they can't defend that area, then we can get a breakdown and it would shift the bias from bullish to bearish. So those are our main thoughts. Let's see if the buy side can maintain control, and we'll take it from there.